New data says native-born workers have soared by 2 million souls under Trump to a record high, while foreign-born workers plunged by 1.6 million, driven overwhelmingly by deportations, voluntary or otherwise. Last lawnmower on the bus, leave the keys. Now, this kind of puts the alleged weak jobs market in perspective. It's a blockbuster job market if you are American. The numbers come from the Bureau of Labor Statistics' current population survey covering the month of September. They are 1 month behind on the shutdown, and it found a surge of hundreds of thousands of native-born workers on the month, while foreign-born workers dropped. It's a great start, but of course there is a lot of ground to make up. Under Biden, foreign-born workers surged by 4.5 million to almost 1 in 4 jobs in America, while native-born Americans actually lost jobs. That 4.5 would be the Biden miracle mainstream media was pushing before the election, and to be fair, it was a miracle if you are Guatemalan. Now, aside from where the workers are from, the report found that employers added 119,000 jobs for the month, and that's normally a pretty middling number. But remember, all those jobs, plus 70,000 foreigners lost, went to natives. Still, all those laid-off foreigners sent the unemployment rate edging up to 4.4%. Alas, unemployment does count illegals. 4.4 will be cannon fodder for CNN and New York Times, who are trying to doom porn a Trump recession. Meanwhile, the Fed is doing its own doom porn since it worries about job losses, even if they're illegals. Yes, the banker's best friend serves illegals with the same enthusiasm as the Americans it's supposed to be serving. So the BLS report bumped odds of a rate cut in December while raising odds to 4 cuts in the next year and a half. The reason that matters is that GDP right now is on fire with investment and consumer spending. In fact, we're growing at Asia level 4% despite federal layoffs and deportations, both of which mechanically subtract from GDP, even though they make us rich. But markets have been on edge because they're afraid of recession, and the reason is those weak jobs numbers. They've been especially on edge since the government shutdown ended, which took away the prospect of a Federal Reserve money dump into markets, the so-called Fed put. In other words, once you control for who's losing jobs, the Fed is cutting into growth, which is how you get inflation. Indeed, recession odds on prediction market Kalshi are actually falling. They're down to 33% for the next year, down from 42 5 months ago, and much improved from Biden's dying days when odds were in the mid-40s for this year. So as next brought to you by Trust Capital, if job weakness is a foreign-born mirage, it means the underlying economy does not need stimulus, does not need tariff dividends, does not need Fed puts, it may not even need rate cuts that translate into inflation. With trillions of investment in the pipeline from reshoring and AI, there is a lot more growth to come, which is fantastic for American workers, but it also raises the prospect that inflation, which just cost Republicans a bunch of elections, could take off again, costing them Congress next year. Check out all last week's videos in a single 20-minute podcast. Search Peter St. Onge wherever you enjoy your podcasts. Okay, we'll be watching. See you next time.